BofA's Securities Head of U.S. Equity and Quantitative Strategy, Savita Subramanian, joins us. S&P target of 5,400. Savita, always a treat for us. Good to see you.
Great to see you as well. Thanks for having me.
I was just looking back. It's been a little over a month since you did say you had conviction in the S&P, but your enthusiasm had waned based on some of this swirling around of bearish sentiment. Has anything changed?
Well, I think that, if I had to call a market direction from here, it's higher. But I think in the near term, there are a lot of reasons to maybe pare back exposure, especially to big cap tech, and think about where you want to really pick your spots. And that's why my conviction in the index level itself is, not as high. We're not as bullish as we were at the beginning of the year because a lot of other bears have capitulated. And we've also seen the market move significantly higher, led by, again, a narrow cohort. So I think from here it broadens out. But what worries me is that if big cap tech doesn't hold up from here, we might not see as strong of gains in the overall benchmark. We're also heading into a tricky part of the year. So not only are trends seasonally weaker as you move into the summer, but we also have this election coming up in November. And what we found is that the VIX generally jumps by about 25% from June or end of June to November of election years. And this election is even more kind of uncertain than prior elections have felt.
Interesting. When it comes to the AI names, and we will get Alphabet tonight, for example, there's been a lot of chatter this week about estimates for AI capex among the hyperscalers rising faster this year than estimates for sales. And are you suggesting that the street might run out of patience for these investments to pay off?
Exactly. That's exactly right. So the idea here is show me the money, show me the fruition and the monetization of AI. And where we are now is an environment where folks are spending and the hyperscalers are spending, so they're cutting into their free cash flow generation, whereas last year they were in bunker mode. They weren't spending on CapEx, and then you have this huge surprise of, AI, generative AI, and strength in that cohort. This year, the surprises are, we think, baked into the companies, and they're spending more of their free cash flow, so it's a less kind of compelling story from here. Still strong, and we still admit that growth is in tech, and that's not going away, but expectations have really risen to where these companies are today. So our view is that there's probably more upside elsewhere in the market, which is why we like old school CapEx, and we don't think that's getting a lot of attention. The growth isn't necessarily priced in those cohorts, but I do see a strong infrastructure spending cycle coming up that's almost mandatory rather than nice to do. So that's where we really see the strength in the market.
What is old school CapEx?
Old school CapEx.
What is that? Who benefits from that?
Exactly. What am I talking about? So old school CapEx is basically industrials, materials, even energy, oil, and it's the idea that in order to power up all these chips and also to support all of the extra activity that has been moved from overseas back to North America, we need better roads, highways, dams, etc. And what we're seeing in the engineering data is that the U.S. isn't doing great on infrastructure. We've spent the last 10 plus years underinvesting in manufacturing and infrastructure in the U.S., and now we've just swapped about double the activity on U.S. soil. So it's all coming to a head. It's not only the chips, but it's also reshoring and nearshoring. It's, this North America corridor of busyness, on top of which we haven't really spent on a good old-fashioned refurbishment cycle in, over a decade. So I think that's where we're going to see some stronger gains, some more money spent. And when you look at industrials, when you look at these traditional old school CapEx plays, they're not necessarily pricing in as much good news as AI and chips and, mega cap tech.